Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, here we go. We got the experts out there talking about a gold revaluation in 2024. Make sure your ducks are in a row, because when this happens, gold and silver are going to have huge changes in the value of their precious metals. So let's get into this and hear what the big dogs have to say about what's coming up. Before we get started, do me a favor and hit the thumbs up button. And if you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. You can follow me over on other platforms. I do have my own group over on Facebook called Pimpy's Investment Chat. Over here, we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. So head on over here and join us. It's free to do so. In here, I do post updates. If I should get on suspension from YouTube or get removed from YouTube and you want to know what happened to me, I'll let you know right here in this group. I can be found on Twitter, MeWe, YouTube, and the cool thing about YouTube, if you come over here and you join and you find my channel, I got videos going back, I believe, a couple years. So if you want to see some older videos that I have on Nasera, Jacera, gold, silver, cryptos, come on over here and join. Look me up and check out my videos. You can also find me on Odyssey. Catch me on Rumble. When I say that the links for all these are down below in the description, some of you don't know what I'm talking about. It's real simple. Just go down to the bottom right here of any of my videos. See this? This is the description. Hit show more. And there are all the links to all the platforms I just spoke about. So if you do want to head on over to Money Metals, just click it. And there you are. So come on over. Join us. I look forward to having you. Take a look at crypto, see how they're doing. Oh, look out now. Hey, Bitcoin above 38,000, sitting at $38,041. Ethereum, $2,090.40. XRP, yeah, well, it's not moving very much, is it? Okay, it's at 61 cents. Solano's at $60.64. Cardano's at 38 cents. Dogecoin is at 8 cents. Chainlink ain't doing very much neither, 14.61. Polygon at 77 cents. Polkadot at $5.48. Litecoin above $70 at $70.03. Shiba still at 5083. Terra Luna coming back just a little bit at 3012. It is down almost, it's down 4.38%. Saitama gained to zero, but not by much. They're down 3.62%. Over the last 24 hours is not too bad, but this is the pattern of Saitama. They do crap like this. It drives me insane. So over the last 24 hours, they are down 3.62%. Over the week, they're only down 2.6%. Over the month, they're down 17.72%. But over the last 90 days, 3 months, they are still up 43.31%. Good move, Saitama. Hopefully they start to regain and get back up there and delete these zeros. Gold at $2,042.20 per ounce. Looking lovely. Silver at $25.29 an ounce. On the run, but I don't expect them to continue to do this. I think you're going to see a slight slowdown, because in 2024, if all goes the way that Andrew Maguire is talking about, then you're going to see the revaluing of gold and silver, which means these values are going to jump up big time. And be prepared for it. Hopefully you guys got your gold and silver so you guys can catch this wave. So here you go. Let's listen to Andrew Maguire and hear what he has to say about this revaluation, shall we?
Yeah, Shane, great to be with you again. Great to be with everybody. Let's start by looking at everything and answering as many questions as possible. So, but putting geopolitical drivers aside for the moment, because obviously they are a factor, I'm going to focus on what to expect into the end of this quarter. Guys, that's 35 trading days away, so important. But first, let's answer a lot of questions and look at why, when we're evidencing gold priced in every single other currency stretching to all-time highs, we saw the dollar gold price decline at the open of November trade. And for us really to draw attention to why this counterintuitive action is the final officially driven, and it is officially driven, kick at the can before we see the only central bank short gold, which is, yep, that's the Fed, forced to revalue gold, which A consensus of first-tier liquidity providers suggests, at latest, after we enter the physically driven 2024 marketplace, as I say, not very far away.
He's right. 2024 is 35 days away. And he's talking this revaluation, in his opinion, is going to happen the first quarter of 2024. So I hope you guys have been doing your stacking all these years. We've been speaking about this. We were expecting this to happen a few years ago, but it hasn't. And how can you fuss about this? Because this allowed you to stack up even more gold and silver as you went along. So get ready, because this ride is going to be going crazy here at the beginning of 2024. I used to say this all the time. We are 6 seconds into an 8-second ride on Bodacious. That's right. We got our spurs up in the air. We're hanging tight. We need that 8 seconds so that we can grab the gold.
Have to have no choice shortly. But to answer the immediate questions, which I know you shared with me, let's kind of drill down to the November footprints as we carve out a significantly higher stair step to rally from. Now, the only gold and silver traders not seeing this gold revaluation play are the siloed COMEX speculators, acting as, of course, the useful fools for the officially sanctioned cartel. Now, whereas anybody else looking at the global physical footprints outside of this casino bubble evidences every single other central bank, without exception, are converting their rapidly depreciating dollars into physical gold. And it's not that gold is going up. It's simply costing ever more freshly printed dollars to buy the same ounce of gold.
What he's saying is your crappy fiat dollar is losing more and more purchasing power. So they're exchanging the worthless, crappy fiat dollars to purchase more and more physical gold. Do as they do. I say that all the time.
And with supply tightening, the offer price to sell an ounce of gold is going to rise accordingly. Now, what is missed inside the casino bubble world is that while the Fed tries to hide the velocity of dollar debasement, well, as weighed up against the 5,000-year-old physical gold benchmark, which they hate, they attempt to hide this red flag by conjuring up just enough paper gold out of thin air to be able to trick just enough splintered speculators locked inside the casino into accepting the diluted gold price so that they can then ditch this paper gold to influence them really into buying the assets the Fed really want them to buy. What they're touting, which is their high counterparty risk, worthless, conjured up treasuries.
I just spoke about this in a video not that long ago. People are asking me, Pimpy, should we buy any ETFs when it comes to gold and silver? I was like, no, never buy paper gold and silver. Buy the actual physical gold and silver. The paper market is being used to manipulate the actual value of physical gold and silver. Because if you buy the paper gold and silver, you're going to be stuck with paper. That's all you're going to get. They've way oversold the gold they are representing. They way oversold the silver that they're representing. So you're better off holding on to the physical gold and silver, because when the doo-doo hits the fan, those holding on to paper will get nothing. Those holding on to physical gold and silver, man, you're going to benefit big time.
However, outside the synthetic bubble, competing central banks are stealthily converting overpriced dollars and treasuries into underpriced bullion. And in fighting the natural rise in the gold price, what the Fed is actually doing is exposing its Achilles heel to competing global central banks who are well aware that the Fed's 8,130 tons of unaudited, rehypothecated gold reserves, if they exist at all, are also grossly undervalued.
Yes, Andrew, and just so everyone's up to speed here regarding the situation surrounding the so-called U.S. gold reserves, it's probably worth updating. What are you seeing with these gold reserves?
Yeah, you got to remember, though, when we went in and killed Gaddafi, when we went in and killed Saddam Hussein, magically their gold reserves disappeared. Magically. the odds are the United States took it, and we have their reserves as well.
Yes, Shane, especially as every audit of Treasury gold has been refused since 1953. And while there's been some later samplings, no full audit has been undertaken in 70 years. Now, go figure. There's no reason for this.
No, but that just shows you how weak our government is. 70 years, we have not had the taxpayers' gold audited. Who the hell has that kind of power to refuse the government's audit of the physical gold we're supposed to have? Now, my thinking is the Federal Reserve used that gold, lent it out to different countries for different reasons, and the gold is not there. I don't think they sold it. I think they lent it out. But by now, they probably have been starting to pack up Fort Knox all over again, but there's no proof of it. Can somebody explain to me how it is they are refusing the right to audit the people's money, the people's gold? Crap that we're going through, that's how corrupt our government is. Why are we asking permission to audit our own gold reserves that belongs to the taxpayers?
The static pile, it hasn't changed since the 1970s. So it's a fair assumption that this 8,130 tons of Treasury gold are compromised, as was revealed back in 2013 when the Bundesbank requests to inspect their vaulted bullion there was outright denied. And this audit refusal was followed swiftly by the Bundesbank requesting a 300-ton gold repatriation. Now, although tiny in comparison to the...
Now remember, what he's talking about is a country requesting an audit of their own gold. America holds the gold of other countries, just so you're aware. So when a country wants an audit of their own holdings and they're being denied, then everybody has a right to be very suspicious about what's going on. So we're not just holding Americans' gold, we're holding the gold of other countries, supposedly. When you deny them the right to have access to their gold, there's a problem.
Over 600 tons of gold cleared in London every day. And of course, that's just netted out on the books of the clearing banks. Plus the thousands of tons of gold traded in the futures markets every day. This minuscule physical repatriation request was spun out by the Fed into a foot-dragging, unbelievable 7 years to repay. Now, to provide contrast, our liquidity providers are able to send 25 tons of silver or gold bullion on a single commercial flight. So if it was there, 300 tons could have been actually repatriated at the latest in 12 days or less. Now, look, ultimately, out of embarrassment, to tighten up the repatriation timelines,
Repatriated that he's talking about is when a country decides they don't want the United States to hold the gold anymore. They want to bring it back to their locations. So the United States is denying countries the right to their own gold.
the Fed had to make up shortfalls in this 300 tons of original German bars by replacing some of these Bundesbank banks with 1930s confiscated smelt gold, which did not meet original purity standards. Another embarrassment. So in fairness, really, two things came out of this rehypothecation example. Some of the original German bars had clearly been sold. And to make up the difference, these bars of 22 carat treasury smelt gold had to be substituted. Now, given at least some smelt bars were tapped into, it's very, very strange that the 8,130 tons of treasury gold holdings never reflected any withdrawals back in 2013 when this gold was supplied. Now, secondly, the Fed's effort to stall returning the bars that were in the original Bundesbank form, it provides empirical evidence that those bars had been rehypothecated, catching the Fed needing time to buy back those multiple ownership claims to these bars. And look, there are no other explanations. And it's not gone unnoticed by the global South central banks capitalizing on this dilemma and stealthily waiting for a real undiluted physical gold price to emerge, hence all the buying. And what we're trying to draw attention to here is that the Fed, the only remaining global central bank forced to be short gold, is in trouble. And given the unprecedented, officially reported, and even larger unreported central bank physical gold demand, in aggregate, conservatively, estimated at well over 1,000 tons of physical demand during 2023. Now, the window to capitalize on this opportunity is closing fast, as most first-tier physical gold wholesale market liquidity providers estimate that by the end of the fourth quarter, yes, just 35 trading days away from when this episode is published, so little physical gold will be left to underpin this rehypothecation scam, it'll lead to an inevitable central bank-driven gold price revaluation.
Ooh, 35 days, you guys. 35 days. That's what you have. 35 days before reality smacks everybody in the face for a cold wake-up call. 35 days. The first quarter of 2024, Andrew Maguire is anticipating a revaluation. They have no choice. They stole gold from other countries, lent it out for whatever reason. Nobody knows where the gold is. They don't have enough to cover the gold that's being requested. So who are they going to turn to for the gold? Yes, those who hold gold as well as silver.
Now, this bullish for gold demand comes at a time the Fed is in complete disarray. And as we highlighted in our last episode, drawing attention to actually Goldman Sachs' question, which was who's left to buy this 1.784 trillion of newly issued treasuries next year, really they were drawing attention to concerns that interest on this debt is going to rise exponentially to the point that it becomes the single biggest government outlay. Now, all of this ultimately leads to just one conclusion. The Fed will have to re-implement QE so as to monetize the debt and the deficit. And what the heck's that going to do to the gold price? And as we outlined in our last few episodes, this will be the trigger point for global banks to revalue their unencumbered gold reserves.
There you have it. And those of us who are holding on to silver, I will leave the link for this interview because you got to hear what Andrew says about silver. He says silver and gold go hand in hand. So when they revalue gold, silver obviously is going to go along with it. Then he went on to make a point about the ratio is way out of whack. It's like 80-something ounces of silver for 1 ounce of gold. Doesn't make sense. So for those of you holding on to silver, this ride is going to be awesome for us because once they revalue gold and silver, they usually reset the ratio. And if that's the case, you're going to see a bigger jump in silver than you are gold. Anyways, you guys, let me know what you think. I look forward to your comments, and I will catch you later. I am out.